What's going on, guys? It's Tiggers and Tokens here, back with another video. And in today's video, guys, I wanted to talk to you about some common retail investor mistakes and what you can do to correct them or just avoid them in general. Now, when it comes to investing, there is always a risk of losing your money. Nothing I say in this video is financial advice, and it shouldn't be taken as such. You should always ask a financial advisor anytime your portfolio is looking bad. I know mine does this year. But the first thing you always want to start with, guys, is invest with a purpose. You want to have a very specific goal, very specific time frame. You want to know exactly what you're looking for out of your investments. So, what is your end goal? Are you looking to retire early? Are you looking to maybe make a little short-term money so you can buy a new car or buy a new home? You got to always ask yourself what your goals are, because that determines how much risk you're willing to take, how much investment you can put in, and overall, just your age too. Your age does matter, and usually choosing what your goals are. Me personally, my goal is retirement. I want to retire early. My main job is a warehouse job. I don't feel like it's getting me where I want to go fast enough, so I'm trying to just make as much money as I can in the meantime through trading, through a YouTube channel. I'll, whatever I can do to just hustle, hustle, hustle. I always got to stay hustling. My goal is to be retired in about 10, 15 years. I'm 27 right now. I'll be 40 in about 13 years. That's my ultimate goal. Be retired in my 40s, at least 40 if I can manage it, but even sooner would be better. I want to get up to $1 million, couple $1 million if I can at least. Um, I want to get there through investing, maybe doing some work, side hustles, these kind of things. But if you have the same goal, you want to focus on building out a long-term portfolio, slowly building out assets in your long-term. You hold them for the long-term too. You got to be willing to hold stocks for a generation to make generational wealth. That's what this is all about for me: retirement, generational wealth. But if you're one of the people who's just looking for a short-term financial goal, that's fine too. You want to just buy the new car, buy the new home, all that's fine, man. Just it depends on what your goals are, and it depends on your time horizon. But another common mistake I usually like to see out here, I like to see another common mistake I see out here is panic selling. This is when you start to see the markets crash, and then a lot of the retail people who were in stocks they shouldn't have been in will start to sell. I don't know what's got popping up right here. But they start to sell their stocks all the way at the bottom, and then it'll start to fall some more. They sell some more, fall, sell, fall, sell. They're in stocks they didn't really believe in, so they had to start selling them because they're scared. They think the market's going to keep bleeding, going to keep dying. The only thing that sucks is that usually once retail sells out of stocks entirely, that's usually about the time we're at the bottom of the market. So once you see all the, you know, individual investors like me, you, and the next guy start to sell and get out, that's usually about the time the big money starts to come back in, because they know once retail gets out of the market, that's probably about where the bottom's going to be. You'll start to see like this overreaction. You have short term. Major stock exchanges use trading curves and halts to limit panic selling. They do halt the trades to try to stop people from pumping stocks too high or dropping stocks too low. But it doesn't always catch for everybody. People still manage people still manage to sell out of their stocks when they really probably shouldn't. They'll be in a stock like, say, Apple or Tesla, which is a great, perfect long-term company, but they lost sight of it. They weren't paying attention to the fundamentals of the company, or they weren't quite aware of what the market was expecting overall, and they sell out. On the opposite end of that, I see a lot of retail traders also doing a lot of panic buying, or fear of missing out, the FOMO. Seen a lot of this with like the cryptocurrencies last year. Shout out to SHIB. I still got my SHIB, y'all. And, you've seen a lot of this with like the hype coins like Shiba Inu, Dogecoin. You've seen it a lot with stocks like Tesla when it was rallying real big. People just see a stock shooting up, and then they got to jump in. They got to get it. Get it while it's hot. And if it gets cold, I can't make no money on it. I got to get it right now, right now, right now. The fear of missing out is a fear of missing out. Yeah, fear of missing out. being triggered by buying a short squeeze can exacerbate panic buying. Yeah, also called a melt up. So yeah, what happens is shorts get caught. People who short sell a stock are always looking to keep the prices low so they can buy them back and cover the shares they're borrowing. But then if they get caught in a stock that's rallying, they can end up in a short squeeze, which makes them buy the stock back, which shoots the price up. And another one has to cover, shoot the price up. Another one has to cover, shoot the price up. Retail will catch in, and then they'll all just pump the stocks well beyond what it ever should have been. And this is kind of the thesis behind AMC. Shout out to the AMC apes out there. And this is a good way to either lose money when you're trying to FOMO in, but an actual short squeeze play can make you a lot of money. So be aware that just because a stock is running doesn't mean you should avoid it, but you also shouldn't be chasing it either. Just don't be chasing stocks out here. Let them come to you. Look for opportunities, and you always got to ask yourself too on the same mindset: are you actually gambling or are you investing? I'm an investor. I buy companies I love for the long term. I buy companies I want to hold today, tomorrow. I want to give to my kids, my kids' kids, my dog, my kids' dogs. Man, like these are companies that I want to be in. I'm proud to say I'm an owner of. You got to remember that when you are investing, you're taking part in owning a company. So you are saying, hey, give me a share of this company. I want to be an owner of this company because I believe this asset will make me money in the future. That has to be your mindset around investing. You got to think, okay, this company is going to be 2 times, 3 times, 5 times, 10 times where it is tomorrow, next year, 10 years now. Sorry, 10 years down the road. You got to be prepared to deal with the volatility in the meantime. Many traders are gambling without even knowing it, trading in a way or for a reason that is completely dichotomous with success in the markets. And as they talk about how people have hidden gambling tendencies. Yeah, you see a lot of this with the people trading options. This happened a lot last year, where people just trade these way out of the money call options and put options, and they have like 0 day expirations, man. And if you understand how options work, you know that like the probability of you making any money on that is astronomically low. I granted you, if you hit it, you can win. You can win really big. You make astronomical profits, but your chances of winning are just like that of a lottery ticket. That's basically what you're doing. You're not even an investor at that point. You're just betting on that maybe the stock will go this way. I think the stock will just you don't honestly you don't even have a strategy. You're just gambling. There's no even strategy to it. You'll see a lot of social proofing. This is where you see there's a lot in like Reddit forums, people pumping the stocks and they'll show their plays, their massive gains, and then it becomes social proof. People are like, oh yeah, he can do it. I can do it too. I got to get into these plays too because again, it's FOMO, fear of missing out, and then you start to you get that addiction, that dopamine rush of like, oh man, if I can just win one of these big plays, I can just make it and I'll be good to go. That's all I got to do. But that's the same mindset that keeps people playing the lottery. And one of my first videos ever, it's deleted now, is a video about how the lottery is a scam. It's all designed to just take your money, keep you hoping and praying. And that's not what investing's about. Investing's about a good, solid, foundational, building out a portfolio, nice and slow, steady, taking time. Another thing you like to see is money on the sidelines. People are scared to invest. I know I used to be back in before I really even knew anything about stocks or crypto or this, that, and the other thing. I always thought investing was risky, man. Like everybody always told me it was so risky and you can lose everything. They told me like it was the most likely thing for you to lose everything. That's just our understanding of what the stock market was, and they teach you that for a reason. They want poorer people to believe that. They really do want you to just keep all your money in a mutual fund. A money market fund, a CD, or just store it store it in your mattress so you can sleep with your money. Everybody likes to sleep with money, right? More or less. But you don't want to be keeping your money all your money on the sidelines. It's okay to keep some. I can understand doing it right now. You can put it in a bond, or bonds are paying pretty good right now, given all the interest rates. But you want to keep at least some of your money in stocks at all times, because if you you know anything about how the market can just run at the end of a bull market, it just takes off and you can't even catch it. Sorry, my dog is barking. When it takes off, you can't even catch it. And if you miss even the couple best days, you end up in a portfolio that just doesn't nowhere near return what it should have if you just stayed in the market. Sorry, got my dog yelling. Come here, come here. Okay. But yeah, if you keep your money, it's safe. Keep your money safe. I don't really like that word because it's not really safe just sitting there parked on the sidelines. It's getting chewed up by inflation, especially when inflation at like 8% like it is right now. It is getting really, really chewed up. There ain't nothing safe about losing your money to inflation, in my opinion. And so the ultimate goal for investing is to look for assets that are going to beat inflation. Don't keep some money on the sidelines if you want to, but be at least somewhat invested. Not financial advice. I always say this, not financial advice. But, you should keep some of your money invested, in my opinion. And then, you should always. So I'll read this right here. Some investors, however, do not keep money on the sidelines when times are bad. Legendary investor Warren Buffett is known to take advantage of times when most investors are on the sidelines. Yep, I have this exact same mindset. I try to stay about 95% invested at any given time. I don't like to be sitting on the sidelines waiting and like, oh, am I going to get in here, get out here, try to time the market here, trying to time the market there. You're not going to time the market, people. You're not. The best hedge funds, computers, and AI in the world can't do it. You got all these multi-billion-dollar hedge funds who tell you, yeah, it's hard to do. We've only done it successfully maybe once or twice. And then I'm supposed to believe that me as an individual retail trader with X amount of money, there's nowhere near as much money as they got. No, it ain't going to happen, man. Just stay invested for the most part. And then make sure you're staying invested in good companies too, because the last mistake I see a lot of is people just putting all their money in meme stocks. Nothing wrong with meme stocks, y'all. I like my SHIB, I like my Doge. I'm out here with the meme stocks. I get it. You got communities, man. It's always a social thing. I totally understand it. I'm not out here to dunk on my SHIB army or my AMC apes. I'm not out here to dunk on y'all, man. I just want y'all to make sure that y'all are in good companies. Make sure you stay invested in blue chip companies like Apple, Microsoft, Google, Nvidia, Tesla, you name it, man. Walmart, Coca-Cola, McDonald's. Make sure you're in these good foundational companies that can bolster up your portfolio. You shouldn't be betting the entire farm on the short squeeze play we were just talking about a minute ago. It's okay to put away like maybe a percent, 2, 3, 5, 10% max, man. I wouldn't even go as high as 10%. That's a lot to me. But I'd say about 5%, you can have your speculation money. Leave it around in, like, say, SHIB or AMC or Dogecoin or whatever hype play that you really like and think has potential. For me, it's mostly SHIB. I think SHIB has the best long-term potential just because there's such a big community around it, so much retail traders love it, and I think if anything's going to take off, it'll be SHIB again. But yeah, you want to make sure you're well diversified, guys. You ain't got to be in 1,000 different stocks, but at least no less than 10. I'd say being at least 10 stocks at least. Again, not financial advice. This is just my opinion. This is what I would do. Just focus on good companies. Get about 10 good companies and maybe about like two or three memes type plays, and then you should fare out pretty well. Give yourself an opportunity to make money on those mean type plays, but you want the bulk of your money in good companies that aren't gonna just disappear overnight. You know what I mean? They ain't gonna pump and dump, and they might dump a little bit because this market has been brutal this year. But just stay invested in good companies, guys. I'm gonna be a broken whistle on this one. I probably say this every video. Just investing in good companies, stay in it for the long term, expand your time horizon, and just don't let your emotions get to you, guys. You got to be patient. You gotta keep calm in markets like this. You got to keep your temperament. It's not about brains. It's about temperament. Shout out to Larry Jones on that one. Shout out to Larry. If y'all ever want to share this video with him, hey, let me know. Because I follow all the big financial guys, and I can only hope my channel ever gets to their size. But yeah, we all remember the GameStop rally 2021. Yeah, that was a crazy time, man. I wasn't into markets back then. I only just got in about a year ago now. But I remember that happening, and it was crazy. My dog is barking. Yeah, I'm not going to hear it or not. I'm going to leave it in the video. Y'all say hi to Moo Moo. That's Moo Moo in the background. Say hi, Moo Moo. Say hi, Moo Moo. Anyways, guys, that's been the most common mistakes you usually see from newer investors. And if you're aware of, if you made any mistakes before, I know I've made a few of them. Just try to keep in mind not to make these mistakes in the future, and learn to improve, and do better next time. Just put it simple. Just do better, y'all. Y'all can do better. I know y'all can do better. Sorry, I almost going in this video because my dog is going crazy. But I'll see you guys in the next video. This has been Tickers and Tokens. Please like and subscribe, and I'll see you next. Peace.